The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the April 3rd wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I am grateful for your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential, because living up to our potential is what we must master each and every day. So let's start off today by taking a look at one of life's great lessons out there. You know, the most important thing that you can do to achieve your goals is to make sure that as soon as you set them, you immediately begin to create momentum. The most important rule that I ever adopted to help me in achieving my goals were those I learned from a very successful man who taught me to first write down the goal and then to never leave the sight of setting a goal without first taking some form of positive action toward that attainment. It's not just about writing it down, folks. You've got to take some step that will help to propel you on that journey to being able to attain whatever that goal is. Now, the man's name that I got that great lesson from is a man named Earl Schoaf out there. Great lessons. He also taught me this life lesson. When you temporarily run aground, remember that there are no failures in life. There are only results. That's right. There are no failures, only results. Consider this adage, folks. Success is the result of good judgment. Good judgment is the result of experience. And experience is often the result of bad judgment. How about that for a circle of life? I'm going to go over that once again because you should really write that down. I know I've got it written down. There are only results, right? There's no failures, only results. Success is the result of good judgment, and good judgment is the result of experience, and experience is often the result of bad judgment. You know, there's a lot of folks that won't take action because they're looking for perfection out there. You know, that lowest standard. They want to make sure that everything is just right. You don't need to do that because you want to make sure, you know, you've got that beautiful circle in life out there. 877-927-6648. Let's go take a look at the circle of life here in the markets. We're going to start off by taking a look at the ES Mini because we have a low that should have been put in here, at least for this time frame. Ooh, how does Steve-O say that? Well, how about we just take a look at the experience that we have out here? The experience that we have, if you're watching us on Tiger TV, you're looking at my 30-minute ES Mini chart out here. If you're just listening on the radio, your mobile device at tfnn.mobi, remember, you can always catch this show streaming live to those devices. Just go to the homepage of tfnn.com. Over on the right-hand side, you will see a button with 3 little smartphones on it. Click on that. The show streams live, or the archive is on Channel 10. Now, what we're looking at here is we're looking at expansions and contractions of swing points. Now, this is pretty cool. How is it that this happens in life? It's a beautiful thing. When we started off the show at 9 o'clock this morning, just simply showing you the same chart and showing you a 1.272 expansion of a swing point. That came in, that swing point that we were looking at was at 10 o'clock in the morning on April 1st, all the way up to the swing point here that came in at 11:30 yesterday on April 2nd. We also saw that there was a 2.618 expansion up to that level. That was at 1568. Now, as we come on the air, what do we have? Well, coming in this 1557 level, you've got a 2.6 expansion. That's the expansion from 11 o'clock last night to the high that was put in here at 5:30 this morning. So you've got a 2.6 expansion. You've got a 1.272 expansion. That's coming off of this bullish engulfing candle that came in yesterday's close, that low. 1559.50. So from that low all the way to the high that was put in at 5:30 in the morning, you got a 1.272 expansion. Now we also have a 0.786 expansion off of a set of swing points, and I'm really going to use here, and from a rounding standpoint, you can come back really to the level here that came in at 4 o'clock in the afternoon on April the 1st out there, right around the 1552.50 level. So we've got Leonardo Fibonacci He's come all the way back here on April the 3rd, and this is where we're going to see now. What we also have as another indicator or element out here is that relative strength indicator where you're in the oversold territory. So you got Mr. Fibonacci hanging out here. So how did that work that I was showing you this morning? A 1.272 and a 2.68 expansion on the upside, and now what we have coming into this hour here. Now, does that mean that it's going to work? Absolutely not. But if you were going to go ahead and trade intraday and you were going to go ahead and put on a trade here, it would be an easy spot to do it. Now you can go down into the 10-minute chart. In fact, let's just do that here. 10-minute chart, no bullish candle. You can always wait until you are sure that the cavalry is arriving. No reason to necessarily have to be on the front line. Just simply go down to a little bit shorter term chart out here. We've got the 10-minute chart on the screen and wait for the first bullish candle to show up there. It has not arrived just yet, so we know that the cavalry's on its way. Uncle Ben and his army, they're on their way out here. Or maybe it's just the traders that simply utilize Fibonacci expansion, contraction, but they haven't shown up. And they'll show up here because you'll start to see some type of bullish reversal candle. 877-927-6648. Let's go start taking a look at some of these stocks here that are popping and dropping in the marketplace. Panera Bread, we were taking a look at Panera Bread earlier just as we were going off of the air on the 9 o'clock hour. We were noticing it's got nice volume, but what you want to make sure that you're always doing is drawing your lines of where the battles are formed. In the case of Panera Bread, the battle being formed from that gap down candle on October the 5th. That was gap down, not with any huge volume. Still with some volume, the gap down on October 5th at 731,000 shares out there. That gap setting up a area of resistance, resistance being tested again today. It's got the volume to bust it up, but of course it also had the volume as it had gapped up, as this equity gapped up on October 24th with 1.4 million shares. So far today, it's done a volume of 335,000 shares in 45 minutes of trading out there. So that has more volume than this 1.4 million session from October the 24th. We'll see, though, if Panera Bread can break through that resistance area. If it can't bust them up, what will Panera Bread do? That's right. It'll try and bust them down. And what we can see is Panera Bread has been really traveling in a consolidation level ever since the lows that were put in back here in September of 2012, September 5th. 2012 out there. So it's been consolidating anywhere between the price point of about $155 to $175. So you got about a $20 consolidation out there, and that is on Panera Bread. Let's go take a look at Apple. Let's go see what Apple is doing here right now. You got Apple trading up about $5. So let's go peek in on Apple. Apple yesterday here. Let's see. The candle that it formed. Give me a second here to actually grab something else here. Today right now so far, volume behind the move here in just 45 minutes of trading is 3 million shares out there. Apple, volume-wise, yesterday moved down with about 18 million shares out there. And Apple, let me see here. It is moving down into this swing point. Let's measure the volume. So the most recent swing point low is from March the 4th, and that's got 20 million shares out there. And yesterday, as it came down from a volume standpoint, 18.9 million shares. Still not enough to really bust it down and bust through that low out there. No real reversal candles, though. No real bullish candles other than the actual bull sash candle that it was moving into on March the 5th. That's the 22 million shares that it had there. So Apple's going to need some more volume to the downside. Maybe what we're just seeing here inside Apple is nothing more than a consolidation pattern in between the low of 419 out there and the top of that consolidation range right around the 470, maybe up to 470, 480. So somewhere between 470 and 480 out there. Let's go take a look at Acuity Brands. AYI is the ticker symbol. They are up about 8% this morning. Let's see here. They are out with earnings. They did 486 million in revenue versus 457 million. Operating profit of 48 versus 45. So let's go take a look at this equity here getting rewarded for its hard work. AYI is the ticker symbol. Let's go see what this thing is trading into. Trying to take out a most recent swing point here. Let's pull this chart back a little bit further and see what we've got. as we take a look at this. It's trying to break out the swing point here from February 20th. That has 711,000 shares. This thing so far this morning, 187,000 shares, so it should have the volume to take that out. Let's pull this back a little bit further. Again, the ticker symbol that we're looking at here, if you're following along on the home game version, is AYI. And it's up over, really, this is an area of resistance here. You've got some bearish candles that were out here. You had this little evening star formation. So resistance on this really should be that February 20th area. So this could be a breakout. Let's put this on a longer-term chart, though, and see what it's really doing. So we are now over the all-time highs on the weekly chart out here. So it's setting new all-time highs today. And as we pull this back here on the weekly chart, let's go take a look at what we have. We've got this back out here coming into the time frame of July 27th that had volume of 3.2 million shares. So as this equity broke up above this level, you did it with 1.3 million. So let's draw the line across the screen here. Let's take a look and see if this thing ever broke above the swing point with volume. Let's use black as our, and let's go ahead and put the actual volume on the bottom. That way it makes it even easier for us to pay attention to. So let's do that. Well, it's the first thing that you really should do on any stock chart, in my opinion. And the answer is, it moved up above it and a rejected price just slightly the week of January 11, 2013, had 5.1 million shares. So it was breaking through there with some volume. Didn't mean to do that. Now let's come back here and take a look at, also as it got above there and tested on March 1st, had volume of 3.1 million shares. So you've got some volume on this break. And let's take a look at A to B equals CD patterns as potentials on this. You'd come off, this is the weekly chart we're looking at. Your A point is March of 09, makes sense. That's the low of $20.02 out here. Let's take a look at the B point on this. Is going to be the weekly swing point from April 8th, 2011, out at 61.45. Backs off into the October lows. Makes sense. I'm sure it was October the 4th. Now what you can see here is that this is already, today, what it's done is it has completed the 1-to-1 A to B equals CD. That price point projection, $74.54 out there. But take a look at price here traveling along the inside path of this C to D leg. Says it's actually got more room to move to the upside. This equity ought to trade up to about the $85.91 level. Now let's take a look at expansions. Let's see if it actually sets up a butterfly pattern there. The expansion we're going to use is the July 27 swing point high, $66.89, all the way down to the lows put in here on March, and you can see the 1.272 butterfly. That would complete at about $80, $79.64 to be exact. So looks like this equity wants to trade up somewhere towards the $79.64 to $85.91. That is on Acuity Brands. Let's go take a look at some of the, it looks like the energy sector here is struggling this morning. You got Marathon, Petroleum. In fact, let's actually, I've got a chart out here before we go over into the energy sector. We'll do this when we come back from the break. Then we'll take a look at the indexes as well, because I just really kind of skipped right over that. But you got Occidental Petroleum out here. That actually formed a 0.618, 0.786 Gartley buy pattern. It did that on March 26th. So we'll come back and we'll take a look at that. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzamento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Unleash the hounds. We've got the Bulls now trying to take charge, of course. We saw that 1.272, 2.618 expansion of swing points, as well as a .786 retracement. The 10-minute chart is what I've got on my screen here. That this time period does not end until 10:30, but you can see the Bulls here trying to assemble a group together. Talk about assembling a group. We've got a great group here on the phone. Let's go to Mark in Concord, Massachusetts. Mark, thanks for calling. Thanks for holding. How are you?
I'm fine, Steve. How are you on this lovely midday?
Excellent, excellent. Thank you for asking. You had wanted to take a look at something in the S&Ps?
You've been saying that once it reaches the 1576.09 level, we are going to have a turnabout. My question for you is, did it reach that overnight, or did it reach it maybe in the pre-market, and is this the beginning of the come down if it did reach it?
So great question, but I want to just clarify something. 1576.09 is the swing point high. I don't know whether it's going to break above that or it's going to reverse from there. So what I'm saying is that's a level that you really need to see tested. A reversal would be the following: price would get above 1576.09, close back below it, and we've had light volume. So I'm going to assume we're still going to have light volume here by the end of today's trading session. If that were to occur today, you would have a failure of a major swing point on price and volume. Ideally, what you would then get, and it could occur today as well, or when it would be tested, you would see some type of reversal candle. Could be a bearish engulfing, piercing candle, could be a key reversal day, could be any number of candles out there, but that would then be ideal what you would have. Now, you would not be out of the woods, even though you got a reversal. You would not be out of the woods, in my opinion, until it breaks back below 1546.72, which is the bottom of that swing point. So that's scenario number 1 or 1 and 1A. Scenario number 2 is it closes above 1576.09 on light volume. If it does that, price can still travel higher, just like the Dow, just like the NASDAQ. Both of those are over their 2007 swing points on light volume, and they have moved higher. So no reason for the S&P to not be able to do the same. And the Russell 2000, that is a confirmed move over the 2007 level with volume out there. So that's the second scenario. Third scenario is it moves above 1576.09 with volume, and that truly would be a breakout. So that is on the S&P 500. With regard to your question, did it happen overnight? If you went and you took a look at the daily chart for the ES Mini, its actual swing point is 1586.75, and it did not get up there. So you can't even go and say you had a test of the swing point high from October in 2007. The only way from an overnight session to do that, in my opinion, would be for the ES Mini to get above 1586.75 and then reject that area. So that's does that help you?
Okay, so in other words,
with regard to at least my thinking.
Yes, it does. So we haven't basically the short answer or the short question is probably we basically haven't gotten there yet. We
have not. And,
right.
You know, I mean, we have days where the bulls and the bears actually show up, but it's short-lived. You know, it's for one trading session. So until we see a test of that swing point high, or look, the market could totally reverse down and get below 1546.72. If it does that, then I say, okay, it's not going to go test that high right now. That would be the other option.
If that was to happen, is it conceivably possible that we won't retouch it for or retest? Yeah, right. Retest it for a while?
You know, I don't think that the market is done moving higher. I think we're going to see a retracement. I think we should see a scary retracement. I think we'll probably see, most likely what I believe we'll see a small retracement this time whenever that occurs. And that'll get enough people off of the airwaves, and I'm talking the main airwaves out there saying that we are calling for a correction. They'll believe that it's over, and then we'll see another move higher. Now, whether it breaks out the highest or not, I'm just simply saying a move higher. People will be out of the boat where there's going to be a significant retracement, and then we see the large retracement. So right now, that's how it looks to me like the market is playing out here. And because you got too many folks that are on the air and everywhere else, I'm not just talking TFNN, I'm just talking, everybody talking about, there should be a retracement. People are looking for 10% or so. I can see it maybe being some single-digit retracement, and then the market moves up and everybody thinks it's over. And then that's when I think the rug gets pulled. You got to get everybody out of the boat that's looking for some type of retracement. But that's just my hypothesis right now. I just trade the charts, though, but you asked me for my opinion, and that was it.
All right, Steve. Thank you. Have a profitable day trading.
You bet. Thanks a lot.
Bye-bye.
We come back, folks. We're going to go out to British Columbia and talk about the energy sector with our man, Rick. 877-927-6648. Dow's off 29. We'll be right back.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 37 points. S&P's down 6. Composite off 9. Leading the charge to the downside, you got the Russell 2000 up 0.7% here right now, down $6.50. Let's go out to British Columbia. Tar man Rick. Rick, thanks for calling. Thanks for holding. How are you this morning?
Hey, Steve. How you doing?
I'm doing great. Thanks for asking.
Hey, you're driving in the bush, and your motor's running good, and that's the S&Ps, which don't look too bad. But you got a low tire. You got a low tire, and you're not going to go too far because the IWM is your low tire.
Oh, big time. Yeah, no question about it. We've got a couple low tires out there.
But like on a weekly, I
like how you put that. By the way, that's good. That's good metaphor. I like that.
But you see that gap down at 91, right? And I know Tom figures we could hit 89, which he'd mentioned he thought it might go there. But anyway, on a weekly even, we're coming down on volume, right, on the IWM?
Oh, you're looking at the IWM. Okay, I thought you were looking at the XLE.
Oh, well, you know what? I will, but because you were talking the market, I'll quickly go to the XLE. I just wanted You agree with that. Now, the XLE has a nice high
what the IWM also did here, and I realized that last night as I was putting charts together for my clients, the IWM's been traveling also in this little rising price channel. Shorter term one coming off of the November 16th low, and it actually busted through there on April Fool's Day on Monday. And then you had some additional conviction yesterday, and the real test here now on the daily chart is going to be as it comes into this area where it gapped up on March 5th. That's where we're going to get a real release of information. So 35 million shares there, and you came down yesterday with 47 million shares, and so far today 11. So it is definitely accelerating with volume to the downside, no question.
Well, yeah, it's really interesting what's happened. Like J.P. Morgan's testing a high volume low right now. BAC's got a 3-gap play at 1150. Broke that on lighter volume, even though it went way up there. But let's just go back to the XLE a sec.
Yeah.
What I see here, I put it on a 10-day chart.
Mm-hmm.
And I see that low sitting there from the 19th, I believe it is.
Yes.
And it has, on a 10-day, a perfect head and shoulder pattern, which takes it right to there. So all I'm saying is we could go down and test that low, go a little bit lower, and then very often head and shoulder patterns you go. If we break, like if today we're going down on lighter volume and we'll go down again, and I don't think we're going there today, but one never knows.
Yeah.
But anyway, I just thought I'd mention that. But then you could argue that low down at 75.50's got volume as well, right?
Here's what I think is going on, and and it really pulls together your thoughts. At least in my mind, it pulls together your thoughts and your observations. And what it is, so when you take a look at the XLE, for example, the XLE is the first sector inside the S&P for the summation index to head down. And it actually did that. It began its turn down. It started ticking down on March the 14th. When the XLE actually made its high. And it has continued to tick down on a continuous basis. Now, when I just take a look at right now what's going on, you talked about the IWM. I take a look at a number of the energy stocks here that are trading lower this morning. Now, that's not the case inside ExxonMobil.
Yeah,
and so what I really see taking place here is you talked about low tires. Well, I take a look at low tires as well, and there are some real problems underneath the covers. And what we're seeing is, and it's truly playing out in the small caps. So it's playing out in the small caps because you've got the heavier weighted stocks that are keeping the market higher out here. So ExxonMobil, it's a big, huge percentage of the XLE out here. And so that's what we're seeing with the market trying to at least push its way up into those highs out there. So so you are seeing a shift, and that's why the IWM is the component that's really struggling, because it's the smaller, lower weighted energy stocks as well within inside the XLE. It's not ExxonMobil and it's not Chevron and it's not Occidental Petroleum, but underneath there it's got some real problems.
Mm-hmm.
And the financial sector has been ticking down as well. And it's not the big names, it's not the big weighted names out there in the financial sector. It's everything else underneath the covers out there. And so that's at least what I see. And I think for me, it helps me to even put it together with what you're also taking a look at. IWM wise, small cap wise, smaller cap stocks.
Well, I just say if volumes do work, the IWM is so obvious. You couldn't get more obvious the way it's been acting the last few days, right?
Absolutely.
And the funny part, and I'll just sign off now, but the oil numbers just come out about 2 minutes before you took my call.
Oh, did they? Okay.
Yeah. Well, there's not, but it is dropping. So, but anyway, good enough. That's all I wanted to.
All righty. Hey, did you see Gordie Howe signing all those autographed books, celebrating his 85th birthday on Sunday?
Yeah, that's pretty cool.
Isn't it? Yeah.
It's so funny because, like, right now it's the NHL and hockey, it's trade deadline, and, you're living in the moment, and they're all stars and everything, and as soon as they're not around, you kind of forget them, you know what I'm saying? You're living in the moment, and well, as the older you get, the more you realize that you still have to respect the past and reminisce,
Oh, absolutely. And so we do respect the past, and so we do know that volume eventually works.
Exactly. Right? Good point, Steve. Good parallel. Okay, you take care, man.
All righty. Thanks so much for calling.
Bye-bye.
That was Rick in British Columbia, and let's go take a look. I was mentioning the financial sector out here, and so good analysis on Rick's part, and truly is, what I see when I see the summation indexes continuing to tick down in the energy sector, but yet when we take a look at the energy sector, really hasn't been taken apart or anything, and then you start taking a look at even yesterday, Every index either ticked down. The only two that moved sideways out there yesterday was the NDX 100 and the Dow. And even the Dow was up, I don't remember, was it like 80 points or something? Yet it couldn't even tick higher inside the summation index. The Wilshire 5000, the New York Stock Exchange, everything else ticked down. Inside the sectors inside the S&P, the only thing to move up was the consumer staples, the utility sector, all the defensive play, and the healthcare, which had a good day yesterday. Otherwise, the real leaders out there, which should have been the financial sector, energy sector, those were ticking down. And then when you start taking a look at the weighting structures inside there, it makes sense. It was the larger cap, larger weighted movers that were keeping the market up. In fact, if we take a look at the transports, let's go over. I didn't really go through the indexes here this morning, so let's actually go ahead and do some of that work here now, and let's start off by taking a look at the transports, because the transports broke the hammer candle. So the transports, and we were mentioning it yesterday, it hadn't broken the hammer candle during the 9 to 11 o'clock session, but it did break it after that. And that hammer candle came in here on March 27th, and there was enough of a downtrend off of the highs here inside the trannies from March the 15th in order for this to have been a hammer candle. On many of the other indexes, you'll see this same candle look on March 27th, but there was not enough of a downtrend. Inside the transports, that's a different scenario out here. So the hammer candle was broken, and what does that mean? Well, it means in the transports, when you break an area of support, in a case of hammer, you break a hammer low. If you're long, you're wrong. So inside the transports, and we know that, look, FedEx and UPS, they were giving big warning signals a week ago, or maybe it was a little bit longer than a week ago. I think it was a week ago, last week. But if we do take a look at the transports here, the next area for them to move down to is this little morning star pattern out here that is back into the February 26th level. So that's where the transports want to head down to. Then we can go take a look. Actually, I'll switch over to the IYT. Let's go take a look at the IYT, because that's the ETF for the transport. So let's go ahead and pull that up here on my screen. I think I've got that out here. So we'll take a look at the IYT. Now, on the IYT, what we can take a look at is this little trend line here, which is now breaking this morning. Now, the IYT, didn't have a hammer candle, but that's okay. The transports, the index did, which is even more important. But if you come off of the lows here from November 16th, that low is 85, 83, and then your next touch point, in essence, you're going to go ahead and touch the December 31st low. You can see that right now, yesterday, it didn't break that. The IYT did not. It was also moving into a horizontal level of support out here, and that was that open window that was created between March 4th and March 5th out here. So now what you're seeing is today you're seeing that window being closed, and you're seeing the trend line itself also being taken out. Now, a lot of time left in the trading session, but that's taking a look at the ETF structure versus the actual index that was out there. If we go back to the indexes here, let's go do that. It's right here in front of me. Sometimes daily indexes. Sometimes these tabs, it's even too hard for me to actually see where they are, although I should kind of know it in my sleep because I switch back and forth so often between them. So the S&P, let's go ahead and pull up the S&P because I don't think I did that. So we're taking a look right now. The S&P is trading at 1563. It's trading into what was an area of resistance and now should become an area of support. And that price point level is 1561.56. If it doesn't break 1561.56, you can also see it's dancing the 9-period EMA. The 9-period EMA on this right now, 1561.86 out there. Now, if you were to get a break below this, that's just simply an area that should act as a support. It has ever since the S&P broke over that. It broke over that on March the 27th out there. So that level, which was set up by the bearish engulfing, that's what created the previous resistance, now support support level. Even if that level breaks, you've also got support right down here at the bottom of that swing point, which has not been broken, which is 1546.72. Now, that would be a heck of a move out there, so you'd see a bunch of pain and a lot of red on the screens out here. But so far right now, the number to be watching for today is going to be 1561.56, and it has traded as low as 1562.62. So that's on your S&P 500. We take a look at the let's go take a look at the stocks out here, the semiconductors. Semiconductors now having broken the second level of support, and the semiconductors, they're headed all the way to the March 14th area. That's going to really be the heads up out here. So the semis are absolutely weak. They're breaking down, and the semiconductor index is going to head to the 410.82 level. It has broken the first level of support, now the second level of support. And so long as you get a close today, yesterday you had a slight close below the high of that gap up from March 4th, the high of that session, which was 424.63. Yesterday's close just slightly below it at 424.21. But today, you've got continued movement down. Yesterday with the market moving up, the semis said not so fast, and the semis are saying they want lower prices. If we go take a look here at the New York Stock Exchange, that also ticked down and has continued to tick down inside the summation index out here. So, you've got this line of resistance out at the March 15th swing point. It can't take it out, whereas the S&P, the Dow, is above that level out there. So the New York Stock Exchange really headed down here most likely into that March 5th area. That's where we'll get a piece of release of information. Expect the New York Stock Exchange to head down to the 89.39 level where you've got that first open gap out there. Let's go take a look at the NDX 100. The NDX 100 here still traveling with inside that 0.786 Gartley sell pattern. Really not a breakout session yesterday, but not a breakdown session either today. This thing really been traveling sideways in what seems like forever out here, and it pretty much has been. Really, the first sideways move was on January 2nd, and that moved sideways in a tight trading range all the way until you had a breakout on March 5th, and now on March 5th you've got a breakout and just really traveling sideways to slightly higher out there. But no real, you can't give the edge to either the bulls or bears. The Dow itself, the Dow has cleared all of the real resistance out there. The only thing that it can do is try to create some resistance today by forming some type of bearish candle, and thus far it has not out here. So the Dow not giving you any kind of reversal signal, at least not at as of 10:47 in the morning. Russell 2000, as Rick pointed out, a whole different story out here. The Russell 2000 now should head back to the gap here from March the 5th. The top of that gap is already or the top of the candle of that gap of March 5th. It's already trading into that level. That level at high is 928.13. It's trading at 927.41. That says the Russell 2000 wants to get to the 920.08 level. That is the bottom of March 5th. That's the first place where you're going to see some kind of test of the Russell 2000. Other indexes here, let me see, what did we not get to? Well, we got the composite itself, the NASDAQ, and the NASDAQ, of course, that has the 3 drive to a top pattern out here. Has got the bearish candle, so it has not been able to take out its highs. Has that nice bearish engulfing candle from April the 1st out there. Yesterday, really doing nothing, just traveling with inside this candle, just a small-bodied candle out there. So there you've got resistance set up there. I think that covers the indexes. So let's take a quick peek here at bonds. Let's go see what bonds are doing. Bonds now really trying to break out above the gap down level from January 2nd. You get a break above, a close with conviction above 144.29, and that sets up a nice long trade in bonds. In my opinion, that what you'll see, you won't see it overnight, but you'll see a move up to the 149 level. That's the size measurement of just simply the consolidation area that bonds have been traveling in since the beginning of the year. But first things first it has to close above 144.29 out there. Hasn't done that. 877-927-6648. A quick peek here in gold. You got gold trading at $15.71 right now. Silver, a high-ho silver. You got silver trading out at, what's the magic number? 27.06. We'll be right back.
Are you looking for a precision edge in the market, something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow is off 31 points right now. S&P's down 5. Composite off 7. Small caps down 5. And we can see here the bulls here now trying to rush in. We've got 6 minutes left in this trading session. If the ES Mini were to just stay flatlined right here, close at 15.59, you'd have a hammer candle out here. So we know that by taking a look at expansion of swing points, this is a 30-minute chart, so this is just the update. from the time period that we came on the show, and we're taking a look at that 1.272 expansion. This was a 2.618. Now it says 2.69. Close enough for my work, as well as a 0.786 retracement. So, and also with the market being in the oversold territory. So I mentioned then on the 30-minute chart as well as a 10-minute chart, release the hounds. The bulls should be coming out here. At least they certainly have in the past. When you get to these levels, you have these kind of retracement numbers that hit. Still 5 minutes though left in the trading session, so we'll see. On the 10-minute session out here, again, showing the same expansions and contractions of swing points. We did have a little bullish engulfing that came in here exactly at 10:30. However, it gave it back up during that next 10-minute session. So you've got that little tug of war, that little battle that is brewing right here. Now, what if this area breaks? Let's go back to the 30-minute chart, and the bulls are not able to run to the defenses here. I'm going to go ahead and erase these lines, so give me a second here to do that. Let me do that. Let me get rid of this right here. Let's delete. And now what we're going to do is just simply take a look at using this our Fibonacci retracement tool. Let's come take a look off of this swing point from 4 o'clock in the afternoon on April the 1st. We're going to go from that low up to the high here. So you can see you're already at that or close to that 0.786 level, 1555. That would be the next level. And then what you would see is you'd see a move to 1552, 100% move of a move out there. And that's where you see that last bullish engulfing candle out here. Now, what you're taking a look at here, taking a look at relative strength, relative weakness indicator here, you can see, again, this is the EKG on the 30-minute chart here. So it's not an area for you to be buying or jumping on and trying to short a market, at least not in my opinion here, because this suggests that what you're going to see is you're going to see some kind of bounce, because in order to work off an oversold condition, the market has to move sideways or bounce. Now, it could move sideways and work that off, and all you have to do is just come back and take a look at the chart each time that the market moves down into that level. You can see just simply, does the past equal the future? Well, only if you want it to, and if you understand that patterns out there that other traders are taking a look at here. It's the area here where you've started to see turns. You can go back and you take a look at March 25th as the same type of conditions we're setting up. You can take a look at it right back here in the March 27th time frame. Again, what you're looking at, you can see it again here in the March 28th time frame. You can see it also back here at about April the 1st. So what you should expect, your expectation should be, doesn't mean it's good or bad, just simply your expectation should be that this condition will need to be worked off, and it'll be worked off by either simply moving sideways or bouncing up. And that's just the way that it is. So right now you got the Dow's off 42 and the S&P is down 7. Let's go update one of the charts we were taking a look at yesterday, which was AutoZone out here. AutoZone was trying to break out above a resistance level that set by the swing point from April 27th. Now, it did break above that level. It's being tested here this morning. Now, the reason that it's being tested really twofold. Number one, April 27th, 436,000 shares. And it had a nice day yesterday, no question about it, but it only did 368,000 shares. So now we're seeing, and this is a chart that you want to pay attention to, AutoZone. Is this really going to be a breakout, or was this a false breakout yesterday? If it's a false breakout, that says AutoZone will get back into the consolidation range and probably get down into the 353 level. Stay tuned for Basil Chapman, folks. Have a great Wednesday. I look forward to seeing you tomorrow. Take care, folks.